Well, friends, we've got a ball game. Let's talk the 50-day test today on the Weekend Update. Okay, friends, let's talk our continued test on the 50-day moving average. Here's what you need to know. First up, here's the market the way we've always been looking at it. Red line, here's the S&P 500, purple's the 200-day moving average, and then this orange line that I've added only really temporarily. That's the 50-day moving average, which is what I believe we are testing on right now. And this is kind of like, this is a nice complement to last week's weekend review, where if you look at last week, we were at all-time highs, moving higher. The picture was very different at that time. But if you remember, I had a little bit of hesitation, giving us the all clear, hey, the market's going to blast off higher. And what it looks like this week, it looks like some of my misgivings were correctly placed. I don't necessarily believe that we have exited this 50-day moving average test. If you look at the chart on the market, it looks like, well, what do you mean? We came down to the 50-day, we were below it a little bit, and then we blasted off. That looks like a successful test. Why was this a successful test of the 200-day back in October, November, and this not a successful test, more recently? And one of the reasons why is what volume is telling us down here. If you look back to October and November, one of the things that was interesting that was happening was volume was sort of drying up as the market was going lower. And so what that was telling you was the sellers were sort of running out of juice and that eventually a change was going to come. Then when the market started to turn around, we started to see volume pick up almost immediately, sort of confirming the move, saying that anyone who wanted to sell, the bears, were running out of ammunition, and therefore the market was going to be released to go higher. What we've got here, so that was last year. That was our last test of the 200-day, October, November of last year. What we've got this year is almost the complete opposite. What you notice is as the market keeps pushing to new all-time highs, the volume is drying up on the highs. Moreover, when the market starts to go down, we're seeing the volume pick up on the lows. And so what this tells me that it's now the bulls that are running low on ammunition, and that there's a lot of selling activity that is, potentially could be triggered as we start to trade around these levels. So I still think my read from maybe 3 or 4 weeks ago that we're going to go through a 50-day testing period, I think that's the correct read. And one of the things that I also think is, I think we're going to be flopping and chopping for a little bit around here. So I wouldn't expect, great moves in the market one way or the other, particularly because of the impact of holidays. If we look, we've got Juneteenth coming up Wednesday, June 19th, and we've got Independence Day, Thursday, July 4th. And so what this is going to do is this is going to cut down on the trading weeks. Now, these sorts of things, right, like the market not opening for a day sounds, kind of weird that it would affect trading. And so not for normal investors like you and I, but for larger investors, market makers, those that need to hedge, liquidity providers, et cetera, they're absolutely going to be trading and pivoting around these shortened holiday weeks. It means a couple things. It means volume's going to be low, so you can't really read too much into the market's movements. And it also means you're not going to have as many trading sessions as you were anticipated, and that's going to affect things like options pricing and all the rest of that. So what does this look like to me? Looks like we're still in that 50-day test. I'm very excited that I did not call it early and give the all clear, because then I'd be looking a little silly right now. But I think we're still in this testing phase. I think it's going to continue all the way through mid-June, and then I think the market is going to resolve one way or the other. My fear is that we resolve and we come down and do a test on the 200-day moving average. I've been pretty consistent with that, and I think the economic landscape, the stressed consumer, the inflation wave, interest rates, election, all of that stuff is sort of feeding into that worldview. We'll see if I'm right or not. But at least for right now, we're still in a testing phase, totally normal. Even a test of the 200-day would be totally normal. Remember, bull markets test their 200-day very regularly, quite frequently. So none of this is unusual market action. It's just the regular ebbs and flows of the market. I'll see you next week for the news review. Enjoy your weekend. Peace. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe. You'll be the first to know as soon as we upload anything. Appreciate it. See you soon.